What's happening, guys? I hope everybody had a fantastic weekend. Major bounce last week in the market. Pretty crazy. One of those, good reminders that you should never underestimate a bear market rally. Everybody's just kind of looking for that one reason to, load up and rebuy and the panic to be gone and the reason to cover. You name it. And when all that hits at once, everything starts to go. And I kind of felt like the COVID low when I fumbled that one. I just fumbled this trade again. It is what it is, and that's trading. Unfortunately, you can be as prepared as you want, and if you miss the trade or if you're just not comfortable, it is what it is. And just a word of encouragement if you are not performing. I know a lot of people that crushed it last week. All you had to do was get along. But just keep in mind, if you didn't perform last week, and all those folks that did are saying, all you had to do is get along. Well, guess what? Where have they been the last 6 months, right? You've been performing. You've been doing well. Great. They just made a little bit back. So don't feel like, you've got to do something different next week. You've got to, kind of make up for the missed opportunities, because that's when you start to go backwards. And you know what? If you don't feel comfortable doing something, don't do it. And it's one thing to be biased and stay with a bearish tone or thought, and ignore what it's telling you. I think one thing that we've done pretty well lately is just trend join. Wait for things to kind of to settle and show their hand. 9:45, 10 a.m. has been the continual conversation for the last over a month now, probably 6 weeks to almost 8 weeks now. And that's just what's been working. Typically when I outperform, when I'm doing my best, it's, in pretty much any type of market, but it's one or two names that are, overextending, and I come to the market and I am confident and I have conviction that that's the trade that I'm going to take. I'm ready for it. I want to see the gap up off the open. I want to see, X, Y, or Z happen. And then I'm confident on that trade. And if I'm wrong, which maybe, 1 or 2 times out of 10, I would be in that situation based off of, statistics or probability, then it's worth that risk. However, if you can't have that same conviction on something, such as chasing a CPI number, it is what it is. If you had chased it and it came all the way back down, how would you feel? You would have been upset that you chased it, did something you were uncomfortable with, and lost anyway. So for me, I'd rather just sit back, relax, and wait for, things to come into my wheelhouse. And I think we did a pretty good job about that. Amazon last week, GFI last week, a bunch of other ones. We had a couple small caps kind of sneak in there and give great opportunities. But looking around and based on the opportunity, absolutely, I sucked. I sucked for what I could have participated in, and I just didn't get there. And, you always are waiting for that maybe one more pullback just to have a better risk reward. It just didn't happen. It was just slow and steady and just kept on going, which, as I said each morning, the gap and grind days, just not good at them. I'm just not good at them. So what do you do when you're not good? You just avoid. What do you do when you make a lot of mistakes? You force, you push, and you trade in markets that you're not confident in, and you end up going backwards. The ones that are going to succeed here are the ones that are keeping their money for when they're comfortable, when they're, high conviction type trades, things like that. The ones that are not going to be traders for long are the ones that are going to be, getting all excited about this and then, realizing that maybe they didn't have an edge to begin with and end up giving that all back. So just a word of encouragement. If you did not nail last week, don't worry about it. Focus on what you do best. I didn't either. I was more of a deer in a headlight kind of look at things, and I knew that was going to happen, and maybe I could make changes to do better next time. But, the good news is huge bounces. That's going to give, a lot of boost to different names again. Whether or not we go all the way right back down in the coming weeks, we do know that the next CPI number is going to be a massive, massive trade again. Because if it's not better, then what are we going to do? We're going to go right back down. If it is better, or if it's in line, or whatever the case may be, then maybe we are in that short-term bottom for quite some time. But I still am of the mindset that we're not really going anywhere over the next 12 to 18 months. Now, I've said that probably for 4 to 6 months now, so I guess we've got another year of potential sideways consolidation. I'm not saying we're going to lows. I'm not saying we're going back to highs. I just don't think we're going to be in any steady move. I think we're going to be in a consolidation pattern for that time. So my 12 to 18 month time frame does not reset every single time I do a Sunday scan, unlike Kathy Wood, who every single time she's on CNBC, she restarts her 5-year clock. So that said, Mo Ali, you've got a free month of IU. And t-shirts, Thomas, I'm not even going to try it. Ali Mohammadi, maybe. And Justin Barry, you guys have got t-shirts. So email me, webmaster@investorsunderground.com. We'll get you all set up. And then one good key takeaway that I saw in the comment section, last week I always ask you guys, just put the timestamp, whatever your key takeaway is, because that helps us find, whatever I say that kind of resonates with you. We pull that out and, share it with other people. And this one was reevaluating after 10 a.m. has been keeping me out of trouble. And that comment, I think, is very, very important because you'll see that, for example, CVNA on Friday, great trade. But if you're wrong by 10 a.m., just be wrong, move on. And so I crushed CVNA off the open, pre-market, flush down. And, I think I covered at 950s, 940 and change and 950s. Flushed down to 9. I was like, covered too early. I actually got long. I sold it way too soon. I restarted short. And then as we're coming in to like 10 a.m., I'm kind of developing a game plan and thinking that let this exhaust out and then it's going to fade off. It didn't. It was just holding trend and hanging on after 10 a.m. So move on. Stop wasting time. Set a price alert so you don't forget about it and come back to it. Go do something else. That's just been really what's been helpful lately, especially in this market tape, just because things are lasting longer. Things have come down a lot, right? CVNA, you're like, it doubled off the lows. It doesn't belong here. It came up too fast. It ran, too far. Did it? Or is it just back to a couple days ago, right? You got to always look and think about the facts here. Sure, maybe they're in a very bad position. Maybe they're burning a lot of cash. Maybe they are, hinting that bankruptcy, is coming. But nothing ever happens on your timetable, and you can't ever be too bearish in these situations because just like we talked about, you never underestimate the bear market rally. If everybody's doing the same thing, you're gonna get smacked around because it's difficult to really have that conviction and hold through what you need to hold through to get to where we're going. And if you think about this whole market, right, all these tech names, pretty much every single IPO over the last couple of years, we all know where they're going, but they just don't happen on your timetable because everybody already knows that. Everybody already agrees with you. Everybody's already made that bet. And because it doesn't happen on their timetable, a lot of times people use leverage and things like that. They have to move on and they have to make decisions based on the price. And if it goes higher, their cover is going to send it higher and just kicks the can down the road. So again, just be patient and wait for your trade setups to come. They're there. VZ for the small cap traders, you had a fantastic trade, or VS rather, not VZ. Fantastic trade, probably raises any day. Does that mean that you swing size and you assume that it's going to raise, tomorrow? Maybe they do, but is that good risk reward if they have a PR and it gaps up and it squeezes and everybody's on the same side anticipating an offering? So those are the things that I think about, and that's why for me and what fits with my own personality, it's intraday. I rarely swing. Sometimes like DWAC or big picture ideas, I will swing on the long side, and usually I'd use the IRA for that. Otherwise, I typically just try to not hold positions overnight, especially on the short side. When I do, I wake up at 4 a.m., it screws up my sleep schedule, and it's just not worth it. So anyway, let's get to it. FTX disaster. really put a ton of like bearish and just, it just was a bad taste the day before CPI on everything. Everything's coming in, everything's falling apart, and then all of a sudden CPI goes up the other way. So it was like a peak panic to like this peak like bullishness, and you know, it just caught everybody on the wrong side. Plus the bond market was closed on Friday. So you know, all these things, they gotta add up, and people just caught on the wrong side. It's always the case. You got to remember, you know, that you know, people are looking to buy. There's a lot of money on the sidelines and looking to put it to work. So good money, not this reckless excess that you know, has been in the markets for the last couple of years. Which, you know, I never like to see people lose. I'm not here, you know, hoping that everything comes down and everybody loses all their money. But it is nice to see sort of that it all kind of come back together and start to work out and flush out all the ridiculousness. And I think that that's good, because as a trader now, you know, if you've got some sort of edge, if you've got some sort of high probability setup that you typically trade, this is when you shine, right? Versus the ones that just kind of buy stuff and everything goes up, and you know, it worked out for a very long time. So anyway, so this week I went back Q&A as well. You know, I don't want to continue to do the same Sunday scan every week, because you know, what we've been talking about is working, and I will, you know, when I think that changes, I will say so. But 9:45, 10 a.m. plus trend joins. We've been talking about that the entire time. And channels. Channels we went over in depth this past week. You know, sometimes when I'm not trading and I'm just, you know, kind of waiting for things, I'm going and showcasing, hey, here it is again. Here's the setup. Amazon last week had a great setup. VS had a great setup, the failed follow through setup. Posting those channels, reminding yourself, CVNA, another great example. How 1120s to 1070s, and you draw those lines and you just wait for it to exhaust out and proactively cover into that level. Otherwise, you didn't make money. So let's get back or right into the Q&A. How to decide whether or not to play an earnings report? Easy. Don't. You know, after hours, I don't touch them at all. And you know, even if I was good, most of the time, there's always that one that just takes it all back. So it's kind of like the low float small caps, you know, like either the IPOs that I've been warning against for forever, ever since MEGL that, you know, I pretty much gave up, or whether it's just small cap, you know, crazy momentum trades that, you know, do 100, 200, 300 million. For me, it's just not worth trading the front side. It's not worth the size. Just because there's going to be that one that sneaks away. So it's no different with earnings, where I'd just rather let them do their thing and then pick up the pieces later. So that I will trade them pre-market, but just not after hours. At 4 p.m., I'm done. You know, I'm not pressing any buttons. And I would suggest the same to you. Some people are good at them, but it's a great way to burn your account too. All right, so next one is what gives you the most conviction for your short entries, especially strong front side tickers? So the key to remember is that anytime I'm trading front side of the move, I'm not sizing in. The only way that I would size in is if there's a key level that I'm anticipating for it to move into and basically squeeze out. See that exhaustion move, see the volume hit, see the offers just not budge, basically showing me that there's a huge seller there. Even if it ends up going higher, I like that risk reward, because at least there's inventory now above. And in the event that it pulls down, pulls back, consolidates, and starts to head higher, I can get out. But that's the only time that I would size, you know, on the front side, if you will. But otherwise, it's just very patient, smaller size, just to kind of get in the zone. And a lot of times you'll see me just put basically a placeholder, put on a starter, just to kind of be there and wait for it to set up. And you've seen that a million times, especially in this market, where I'll get there, but I'm not going to size it until it either blows off, gives me that edge, or breaks down. And the reason I do that is just because how many times do you flick through different charts and then you forget about it? You look back and you're like, oh man, that would have been that would have been perfect. It's set up perfect, but I lost it off radar. So I'd rather have a couple in my portfolio showing me right in my face that, hey, check it out, starting to move, and I see it. That's why. So a lot of times people are like, how do you have conviction to do this or that? It's not conviction. It's not me taking on risk on the front side. I'm waiting for that trade to develop. Conviction comes from being proven right. Proven right that, hey, okay, we've got the exchange, it's slammed down, it's staying heavy, breaks down next level, scale in, breaks down next level, scale in, kind of rebounds, fails again, good, right? And then you want to assume that it's going to hold prior levels. You can always re-add. In this market, I like to cover first and ask questions later. Basically, cover first, rescale later, right? Next question was, what is something you've been struggling with lately? The market. There's definitely plenty of opportunity, but, especially having IU sometimes can be a double-edged sword, right? It's great. It's great when everything's, going crazy and everything, but the times that I just want to, maybe take a week off and just kind of, let the market kind of reset back into my zone, I'm kind of there and focused in trading anyway. So, right now I would consider myself struggling with finding high conviction trades, finding A+ setups, finding trades that I'm very confident in taking my normal trade where I would, get in, let it work, and know that there's a good chance that I'm going to be right. So there's just been a lot of, sideways, starting into positions, in either making a little bit, losing a little bit, but not really scaling in. Maybe one trade per day I scale in, upwards of 2 max, but typically, it's like GFI the other day, but it's waiting. It's waiting until, in that case, I think it was like 2 p.m. So I would say struggling as far as getting long some of these huge gap ups, struggling in the sense that, be confident with the fact that we've come down a lot. And one other thing that I kind of thought about is in times of volatility like this, I need to remember to go to my Qs, S triple Q I really like. Instead of trading T triple Q long, I'd rather be shorting S triple Q. I'm more confident on the short side. I like the range. I like the price level of that. And it takes away all the individual kind of name risk. So like if you're looking at Amazon and Amazon comes out and they were cutting jobs and it just starts to go straight up, right? But Apple and Microsoft and all these other ones didn't really budge too much. So I didn't have a position on Amazon at this time, but had you been there, you've got that outlier risk on Amazon, right? Because it's going and the rest aren't. Something like S triple Q or T triple Q, it's based off of more than just Amazon. So if Amazon starts going, you start to see that the strength's coming, well, you've got some time to get out of that position or make adjustments versus something like Amazon where, hey, it's too late. So I need to remind myself in those situations, really focus on ETFs. Very good at those. And it takes away, looking at something like U or UPST or CVNA or any of these names that have gone up and up and up. And you think, oh man, this one's pushed too far. Maybe, it should come in. It takes away all of that because, on some of these, the price can kind of convince us that something should happen. And I think when you're trading the indexes in this situation, there's less of a bias, less of a price influence in a sense. It's more of trend joining. So that's what I've been struggling with in this market, and that's kind of how I plan to fix it. But like I said, I try to use these Sunday videos to show you where I'm performing and what I'm doing and what's really, really excelling in this market, or what I'm staying away from. And I'd rather just not perform than go, way backwards, right? And, I think a lot of times people just go backwards and backwards and backwards and backwards. And then they wish that they had the funds they had when they should have been, patient and quiet when their market comes back. Because as you guys know, it doesn't take much. And once your edge comes back, it's all about, bang, 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 keep nailing the same trade over and over, and it adds up very fast. Last one is, can you explain a little bit about trading around the core? I hear you say it a lot, but I'm having trouble understanding how to determine where the core is. So core just means basically, you start in. Let's just say it's 1,000 shares. You plan to get to 10,000 shares. So you start and you get to 2,000 shares. Trade starts to work. You're at 5,000 shares. It flushes out. And it flushes out. Maybe you cover back down to 2,500 shares, right? So maybe your core ends up becoming 2,500 or whatever. So say you start at 1, you go to 2, you scale to 5, flushes out, you cover some, you get back to 5, it does everything you're expecting, you scale back down to 10 or up to 10. Next flush happens, you scale back down to either 5 or 2,500, but you're trading around that core position that maybe you're not emotionally attached to, but you're using the fact that you're right, you're using your knowledge of technical analysis to scale in when the time's right and take advantage of potential flushes. In the event that it doesn't, you just size back down to your core. That's essentially what it means. So something like CVNA, 1120s to 1070s was a clear channel. So maybe you want that trade. And you start in 1120s, you can't size up because what if it goes to 1150s, right? So it starts to come in, maybe you scale, it breaks down under 11, you scale in, and it flushes to what is going to be support, or not necessarily that but you should assume that it's going to be support. And then anything that you added in, anything that you scaled in, you size down at that 1070 level. And then if it stays heavy there, you can rescale. If not, at least you're taking just the core, back up to, where you were entering, rather than the entire size. So that's really the concept. So, all right, that's it. Let's get into the scan for the week ahead. One last thing before I forget. Tomorrow night, 6 p.m., I think, Eastern, we are going to premiere the trip to Arizona. I met up with Greg and John as programmer. I met up with Cody. And Anthony peppered us with a bunch of questions. A bunch of us went out to the desert in UTVs. That was a lot of fun. I think you'll get a kick out of it. Make sure you watch the whole thing. There's a lot of fun stuff at the end. But hopefully you guys enjoy it. And please leave your feedback on it because we do love doing these. I'd like to do more over the next year or two. But I really do hope you guys enjoy it. All right, guys, so as always, I'm not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're okay with that, you want to learn what makes me take particular trades, then great, you're in the right spot. If you want me to tell you what to buy or sell, you're in the wrong spot. Turn off the video, get out of here, and let's get going. So first and foremost, CVNA. It's been a great trader, great volume, great range. I mean, it's not every day that you get a $5 stock that's got $2 a range, and then a $7 or $8 stock that has $2 a range. The moves intraday are phenomenal. There's been some great opportunities, and it's really about waiting for the trend to form and taking advantage from there. CVNA, we went over the levels in the room. 1070s and 1120s were the key levels. You can see why. And each time that it came down, I reminded everybody that, hey, you're at this key level. You should assume that this holds. You should assume. It doesn't mean that it has to, but let it prove that it's going to stay there. Otherwise, it's coming down to the base. It's going to bounce off it and go back up. And in this case, it did twice, right? And if you did not adjust, if you did not cover, whether you covered the whole thing or part of it, if you did not, you didn't make any money, right? And you probably turned it into a loser. So it's just very important to see this, and also, more importantly, see that now, as it gets back up, now 1020s becomes the base, comes back, confirms, 1020s becomes the base, and then it carries on from there. That's how you know that, all right, now I need to pay attention to the next level. And until 1120s becomes peak again, you need to be cautious fighting that short. That's easy to put on your charts, easy to see, but for whatever reason, it's hard sometimes to do the right thing. So this is that visual reminder to say, hey, You need to be covering into that level. And that's why you see me and you saw me in IU on Friday, reminding everybody at 1070s, if you're not participating and being proactive with the covers, you're asking for it basically. So reactive trade, I'd love to see this 1250, some sort of blow off. I do think that a lot of people positioned for, basically a zero, and then CPI caught them off guard. But I would be very cautious being too patient until you see 1120s peak out and, more importantly, 1070s. So just if you are looking to fade it, just maybe be proactive around those levels, assuming that they're going to hold, let it prove otherwise, and then obviously you can rescale from there. Next main watch is Snap and AMC. I like these price ranges. I like these names. They're always, give some great opportunities. So we had a 2-day bounce with the market. We're into a little bit of resistance. AMC always has that way that, you think it's run too far and then it just does just a little bit more. So I call that in the room in the mornings. I always say build in swipe potential, right? Build swipe potential into your risk. And so what that means is if you're starting in there, just make sure you have wiggle room in case it swipes up another 20, 30 cents. If you're too big and 20 or 30 cents is going to cause you to freak out and panic and cover, then just avoid. Let it do its thing and then pick up the pieces later once nobody's trying to, figure it out. But on that note, Snap as well, like I was saying, ideally we get a nice little trade here. This is an example of one of those gap down flushes, and then it comes back, consolidates. This was the prior support right around this line. Came back, tested it, and it's been up since. So, ideally, it's going to be a market-related trade, but ideally we get some sort of blow-off over 12 and starts to fade back. Under a failed follow-through, we've got Pixie. Pixie is a nice 2-day mover. They did ramp it after hours on light volume. Probably just, bent some shorts and get everybody excited about it. But this should be a nice opportunity. Watch if it pops up towards 22s and starts to fade off from there. Probably an expensive borrow, but we'll see. It should be a great opportunity. But again, it's not something that I really want to trade a lot of size on. There's just so many other opportunities right now. This is how you get screwed, on moves like that. I'd rather be trading these more liquid names where, it's not about a newsletter or Discord just pumping it after hours. It's about a real market, right? It's not just first in, first out. VS, same deal, higher the better. This was fantastic. We talk about these failed follow-through setups all the time. So this was one of the ones that I put in IU as clear as day right there. And then also later on in the day, you've got the same action again. Everybody tries to figure it out and get too aggressive, and then they end up missing the trade because they scale in too much and they get beat. Comes back, scale in too much, they get nervous. But you can see same secondary failed follow-through setup, breaks down, comes back, confirms, and then unwinds from there. So you had 2 failed follow-through setups throughout the day that gave you what should be maybe a little bit more conviction to be patient with the trade. So on top of that, we know that they're going to raise potentially any day. And again, like I said earlier, does that mean that you just stay short? Look, if it works, great, fantastic. But if it doesn't, that's why I just don't swing short. I mean, there's been plenty that would have worked fine, but there's also headaches that I'm glad that I didn't have. And then Veru, higher the better, failed follow through. I think, this was a huge fail and a nice blow off. I think a lot of people were short into this news. It was kind of expected to fail. And so that's why I think it came back nicely. And then I think it's just going to probably taper off towards 5. So we'll see what happens. But ideally, all strength gets faded. But again, if it's holding trend after 10 a.m., don't screw with it. 9, ENSV, nice daily charts there. 9, obviously the standout. It's been a nice one. It's offered nice trades. Just don't fight it. These can hang around a lot longer than you think. But I want to stay focused. And, something like ARQQ, right? Just let it do its thing. And the trade actually was nice 2-3 days later after everybody stopped talking about it, right? So just keep that in mind. You don't need to nail 9 that first day. We already had a huge pullback there right here, and it came back. So that candle right there is good for longevity. This pullback and comes back, good for longevity. That's what you want to see. So be cautious getting biased. I have it on the continuation side. There's a good chance I don't long it, but I just hope that it continues and have a good chance for the fade later on. PSNY, watch dips for potential breakout over 6. This is a nice long idea on Friday pre-market, and it pretty much held trend all day. Not crazy excited about it, but we'll see what happens. And then last but not least, DWAC. Anybody that is on Twitter knows where my head was at on that one. And so far, so good. You know, it had the huge move and had a great trade. Sold most of it, 28, 29s. And I held, a little bit with the intent to buy flushes into the late, week. Wednesday, Thursday, Friday. We had a lot of deep pullbacks. And then it came back strong. So it was to the point where it's like, why did I even hold any of this? I should have sold it all at 28, 29. And then it's like, oh man, we're going, right? So that's what you kind of want, because if you were long, you probably sold out. And if you were short, you probably got really confident. And then it came back up. So I have no intent really to hold it into the catalyst that we've been talking about. But I might hold, I do have some calls on it as well. So I'll probably keep that exposure on just in case, just in case it does nothing and it gaps down. I'm not as upset as if I had a bunch of equity. So anyway, that's it. We'll see you guys in the room. Have a good rest of your weekend. And that's it.